I'll
Hello,
start an
everybody.
introduction. So,
Okay, good.
guys, my name is Sheen Trades, co-founder of Traderlink, and today's class will be hosted by JCrispin and Fatte. These are our two of a few Apex traders that we have. And so basically trying to just give new perspective to different styles. So I think I'll let them get started now.
How's everybody doing? How you doing, guys? My name is Jason. Fatty's here as well. Can you guys hear us clearly?
Yo, yo, what's going on?
All right,
I can hear
good.
you, Crispy, so I'm gonna say yes.
All right, perfect, perfect. So what our goal is with some of these classes, we want to kind of explain some of the market dynamics that go on, and how the markets move, because we feel like that really helps with understanding why the exposures such as gamma and vanna and the ones that we use on a daily basis are so effective. And we wanted to share also some of the other techniques that we use in combination with that to be effective in the market. The first thing that we really wanted to go over is market auction theory, or auction market theory, however you want to use the terminology. Market auction theory is essentially the idea that markets move higher and lower due to imbalances between buyers and sellers. And the market is constantly seeking a level where buyers and sellers agree on a value. So I'll let Fatty take over and give you guys an example of how that dynamic works. But essentially, this is the dynamic that goes on in the market every day, and that you guys are going to see in so many different tools. This is the core dynamic of the market.
Yeah, absolutely. Thanks, Crispy. And I think another thing why we are kind of starting with market auction theory and volume profile is because we wanted to sort of start from the basics, right? Rather than she's been doing a great job covering Gamma and Vanna, which is kind of a little bit more advanced stuff. We wanted to start from the beginning, right? And kind of run it up from there, and hopefully it'll allow those who are a little bit newer to have a good understanding of some of the more simpler ideas, some of the simpler stuff that we look for. Uh, get a bit of a more rounded picture. Uh, Audio's jank.
You're cutting in and out a little bit.
Hold on.
So while Patty works on his audio, just to reiterate what he was saying, we want to give you guys some of the basics and some of the core structures of the market to help better understand the dynamics of the market. The better you understand the dynamics of why these things work, the more conviction that you're going to have in your trades, and the better you'll be able to understand some of the more advanced things. So continuing along with market auction theory, I'll give you guys a real life example. So for example, if there's a car dealership and the car dealership has its prices too high, the dealer has to essentially lower the price of the car in order to meet the demand. So when that dealer lowers the price of the car, there's going to be more buyers willing to buy the car because there's a higher demand. If the dealer goes too low on the price, then the dealer is going to be selling too much inventory. Inventory is going to go low, and then that creates a shortage, which is going to increase the price back up. So market auction theory is this, there's buyers and there's sellers in the market, and there's imbalances that are created between those buyers and sellers. And essentially, the areas where we consolidate in the market are the areas where buyers and sellers most agree on the price of something. So when you see price consolidating, which is most of the time in the market, it's because that's an area where buyers and sellers are most agreeable on a fair value for price. So that's why you'll always see a lot of consolidation in the market. Then when you see price go directionally in one area, that's because there's an imbalance of either buyers or sellers that's causing it to go either too high or too low. And that's the theory of market auction theory, which is represented best by volume profile.
Yeah, absolutely. How's this sounding? Still shit?
So in turn, somebody's coming. Before we continue, does anybody have any questions about that part? I mean, I know there's a lot of information in that little blurb. So does anybody have any questions about that before we move on to the next thing? I'm checking, I'm looking in chat, by the way, and in the Zoom chat. So wherever you guys need to ask questions, feel free. But continuing on. So we see that's a dynamic, that dynamic of imbalances between buyers and sellers is something that we see in many different tools that are used in the market. So if you take, for example, the tape, when you're looking at the tape and level 2 data, usually what you're looking for in that tool is imbalances between buyers and sellers. If you see a large amount of buyers in one level, then it's likely that the price might gravitate to meet that imbalance on the tape. You'll see the same thing in heat maps. Heat maps show you where buyers are present, where sellers are present, and we're constantly trying to figure out what that imbalance is between buyers and sellers. Another tool that uses this dynamic is the footprint charts. The footprint charts are generally giving you a breakdown of each candle, which shows you the imbalances in that candle between buyers and sellers, and you're determining a direction based on that imbalance. So all of these are different tools, and you're going to see the dynamics of balance and imbalance play out in so many different tools in the market because, as I said, those are the core dynamics of the market. There's buyers and sellers, and there's constantly going to be a balance and an imbalance between them, and they're constantly going to be trying to agree on price. Now, moving this on to, the example that we use is volume profile. Right now, if you can see on my chart, you'll see the volume profile on the 5-minute. On the 5-minute, you can see that there's this. We liken this to a bell curve, and you'll see that there's a low area of volume. This is a low value node right here, and this is a high value node, and then it comes down. It's like a dome essentially. The dome is akin to a bell curve. Now, this area right here is usually where price consolidates. This is where the most amount of candles in the last 1,000 candles, for example, have been present. So that means that this is where price has been consolidating the most for the last 1,000 candles. Now, this shows you that this is the area where buyers and sellers agree the most on the price. This is where buyers and sellers are exchanging the most amount of buys and sells throughout a certain time frame. And that's why that's the high value area, because that's where the largest amount of volume is present throughout a certain amount of time. When price starts to move to a lower value node, that's a place where there is an imbalance present, and usually will regress to the mean there and come back to a high value node, or will break through it and go through another distribution area. So if you just going back a little bit further, this was a consolidation area, and this was a low value node, and we broke through this low value node into a new distribution area over here. Now, currently from this distribution area, we're retesting this low value node, and it's starting to fill out into a bigger dome. So this is just an example of how the balances and imbalances play out on volume profile, and how volume profile illustrates that. Patty, you back up and running, or you good?
No, you tell me. Can you hear me?
I can hear you good now.
Is it clear? Is it choppy?
It's better. It's better.
Yeah. So one of the ways I was actually explaining VP to a buddy a couple months ago is, at Crispy's use uh, car sales theory because I actually used to sell cars for a little bit. So I was hoping to explain that, but he did a great job. Another way I like to explain it is almost like, imagine the peaks and valleys on the volume distributions as hills, right? And pretend price is like a bike, right? So when we're going up the hill, right? So you can see Crispy's chart right below that yellow line. You can see that peak right there. The second we break over that peak, we were biking uphill. It was a little bit tough to get up that hill. The second we broke over that peak, boom, get a fat candle, and now we're going down. It's a little bit easier to move, and now we are looking to climb that next hill. Right, that's what 20, 30 points up or something like that. So you can kind of, if you're a visual thinker or learner, you can kind of think of it like that as well.
So some of the let me go to a different time frame so we can show you guys some examples of strategies to trade with volume profile. Do you guys all grasp how volume profile relates, by the way, to auction action to market auction theory? Okay, good. All right, so one example that we use in terms of market auction theory, I'm gonna try to illustrate it as best I can. I mean, this isn't this current volume profile doesn't show it, but let's say you take a look at this dome right here. Let's say that this is a dome. If you guys see my mouse cursor, this is a dome that we're looking at. If price were to come down to this low value area, all of this right here would be a low value area. If we were to come down and stray from this dome, there's a high chance and a high possibility that at some point we would regress to the mean. So when you start seeing a V-shaped recovery, a target that you could use would be the inverted P shape. This dome would form essentially a reverse P, and the middle high value area of that dome would be your target in that scenario. Another example is the distribution to distribution, which was a little bit better illustrated here. So like Fatty said, this was a high consolidation area right here where we have this high value node. Once we break through that gate, we probably are going to go up to this next distribution area over here. So you can see that this is starting to fill out and become a high value area where buyers and sellers agree on price. The likelihood of what's going to happen is that we could come back to touch this high value node if we break through this distribution gate that was spilling out currently. So those are two strategies where we do that. And one way that we determine whether it's going to break or reject is by using gamma exposures, band exposures, all of the different exposures that we have. Once you see the AOIs, you see where buyers and sellers are present, and you see and you determine what actions they're going to take, you can almost tell if we're going to break through a distribution gate to another distribution area or whether we're going to reject at a low value node. So that's one of the ways that we use. Those are a couple of strategies that we use with volume profile in conjunction with gamma exposures and band exposures.
Yeah, absolutely. So one of the things that Gene, excuse me, Gio and Sheen taught us is your goal, right, is to find those imbalances, find those low value nodes, because that is where folks disagree on price, and then they are going to, as Crispy mentioned, they're going to seek out the next high value node, or they are going to revert back to the lower high value. So like the goal, right, is to be entering positions. At least for my strategy, my goal is to be entering positions in the low value. I don't want to be entering anything in those high value nodes, right? Because your chances of chopping in that area are much higher. So my goals are always looking for low value areas, and that is where I'm going to want my entry. And then you can, if you want, you can take a trim in the high value nodes, and then seek out, your target price, right, would be the next low value. So looking at Crispy's distribution right now, what is it, the 5 or the 3? I think it's the
Yeah, it's
5.
the 5.
Right. So you can see at Crispy's on the 5 right now. We tapped a very low volume node on the bottom today. We got our V-shaped recovery because we were in negative gamma. So dealers are buying with price as it goes up. So now you can target the next low value node, which where did we reject? Oh, the exact low value node on top of that distribution.
Knox, that's correct. It moves faster in a low value area. So essentially, once it hits a low value area, you can expect either a bounce or rejection, or you can expect it to break through with force to the next distribution area. So low value areas are your areas where you want to enter, as Fatty said, because that's where you're going to have the reaction that you're looking for. And you can have, if you enter at a low value area, you also have your stop loss, your stop zone, where you would invalidate the trade if it goes in the different direction.
Yeah, if you're wrong fast.
So in terms of time frame, we like to look at it first on the larger time frames. We'll start maybe at the 1 hour, sometimes at the 4 hour. And then you want to look for confluence in those zones. So if I see a low value area on the 1 hour and I see that same low value area in the 1 minute, then that makes it a much stronger area for me to enter a trade. But you definitely want to look at multiple time frames, not just one.
Yeah, I mean, you can even go so far as to looking at the daily, honestly, to find, if you're planning, like the way Geo trades takes 1 to 3 month out swings. If you're looking for a much larger move, you can even go as far as the daily, or I mean, you can go to the weekly if you want to too. You're going to get it on any time frame, and so it just kind of depends on the strategy that you're using. Like I know Sheen likes to be in and out pretty quick. Uh, so he'll every now and again look for entries based on low value, so the 2 minute or the 1 minute, depending on what he's on for the day, how prices move for the day. It's all about, in my opinion, it's all about finding your preference and finding what type of trader you are, because that's going to determine what you're looking for in the market. When you try and emulate someone else, you can find some success if you really hone in and tail them on every single play, and tail them the way they're trading. But in my opinion, it's a lot harder to do. So finding the type of trader you are, finding the time frame that fits your style, finding the strategy that fits your style is one of the most important things that I will preach.
Patty, somebody's asking for an illustration of the P shape. I'm gonna try to better.
The P shape. Oh, hold on. I actually have that pulled up. 1 second.
Michelle.
Oh, shit, did I close out?
All right, so this is the bell curve. This is essentially the basis of volume profile. And as we said, when price goes to the low value area, which would essentially be from, let's say, from the 13.6% zone to the 0% zone, it either is going to break through or it's going to regress to the mean, which is the middle zone. If you, I can't do it with this image for whatever. Well, let me see if I could do it. Give me a second. Yeah, I can do it. Give me a second.
Basically, I just sent that to you and I'll check.
Oh, okay, that's good. Give me a second.
You can copy and paste that image from Discord and just paste it
Yep.
on. Same thing.
But yeah, while you're
So-
doing that, Crispy, Robert, answer your question. How do you know it will bounce at the low value area and not just chop around as it starts to build a new high value at that price? I mean, at the end of the day, you don't, right? So one of the things that Geo stresses is to basically skew the odds in your favor, right? Take the highest probability setups. Is there a chance that it will drop down to a low value node and then build a high value node there? Yeah, absolutely. No one knows 100% where price is going to go, what price is going to do. So you just try and stack the odds in your favor. And so if you see that low value node, to bring it back to the car sales analogy, if you're looking at cars and all of a sudden you see one and you're like, wow, that is severely underpriced. Like I should jump on that. I should buy this at this point, at this price point, because no one else is offering for this. Is there a chance the market takes a dump, 3 days later, or we get a financial crisis or some crazy shit happens? Absolutely. you can't be 100% certain ever on trade. You just try and stack those odds as much as you can in your favor. So that's another area where gamma then comes into play because we did have, we had a pretty stacked, I think it was 50-50 and 50-60 today. We had 50-50 on split and 50-60 on net gamma bar, right? So we knew like near that 60 area, Geo and Sheen always preach that 5 to 10 point range within those gamma strikes. If you look at volume profile and you see that the low value node is somewhere near a high gamma value, like a high gamma strike. Now you've got two things working for you in your favor, so you can take a stab at it. Are you going to be 100%, green on every single trade? No. Would I like to be? Absolutely, every. But unfortunately, that's the nature of this game. You're going to be wrong every now and again. So as Crispy was saying, if it does move against you and it does start bleeding past that that low value node, get out. If you're trading options, though, another thing that Geo has always preached is to size, 1% of your portfolio. Some folks like to go 5%, 10%, whatever it may be, whatever your risk tolerances are. You can stomach a 10% loss, but you know why you took the trade, and those have a higher probability of working out. If you take every single one of those, you're gonna end up green because price isn't always going to just drift past that low value and go the opposite way you expect it to. You're going to have those trades that will make up for those losses.
Yeah, so if you guys look on the bell curve, what Fatty was saying also is, we enter generally in the 13.6% and we average down at the 2.1% area. Once it goes farther past that, the likelihood of it regressing to the mean is high because, like I said, markets always want to agree on that fair value. So if your price moves beyond that and it goes to another distribution gate, you take the loss. That's just the nature of trading and of the market. But the likelihood and the odds are in your favor that it's going to regress to the mean and it's going to come back to that high value area because that's where buyers and sellers all agree on price. So the P-shape example, the reason why it's called the P-shape is because traditionally the volume profile was on the left. Our indicator, which is the indicator that Geo and Sheen made, is on the right. So that's why I said in the beginning it's an inverse P-shape based on the indicator that we're using. But using the picture as an example, basically you have a large high value area. Price had drifted down to a low value area and it strayed far from the high value area. So the likelihood of the move coming back to the high value area is high. And that's why the P shape is a setup that we would take because it's a high probability of it retracing all the way back to that high value area, which is the P is just illustrating a large dome. And then the bottom of the P is just the low value area. It's just regressing back to the middle of the dome essentially. Which I put a bell curve here sideways. If your volume profile looks like this and you have, like I said, an inverted P shape, you have a large dome with a tail at the bottom, it's going to regress to the middle of that dome in more cases often than not. Yeah, the bars, you can ignore the bars to the right of the center. They're not something that needs to be used. Any questions about the bell curve or about the P shape? So just going off of the P shape as well, another pattern that we trade is the D shape. The D shape is essentially the same thing, except you're going from the bottom to the top. So if you're in a large distribution area, high value area, that's at the bottom, the dome is here at the bottom. I'm sorry. And price drifts to the top of the tail. or the top of the D shape, more than likely it's going to regress to that high value area, which would be at the bottom. We're just calling them D shape and P shape based on where the dome is and the letter that it looks like. So essentially, to keep it simple, if the letters are confusing you guys, basically, if you have a large high value area and your price is drifting towards the tail of that area, then the price is likely to regress to the mean. I know Sheena's been mentioning and Gio talking about a regression to the mean with the IV and things like that. Regression to the mean is a big topic and a big part of things that you guys should be analyzing. Things tend to regress to the mean because that's where their average is. There's so many tools that give you the same information. If you take something like VWAP, for example, that's just giving you the place where price is lingering the longest. And price tends to regress to that average area where buyers and sellers agree the most on price. So all of these tools, you're relying on where the average price is going to be sitting at and where buyers and sellers agree the most. As far as where you can tell where that 13% area is, I mean, you're kind of just eyeballing it. If you look at these two domes side by side, this area right here with the white bars, this is your high value area essentially. And the indicator is doing the calculation for you. Anything in gray is essentially your 13% area. And as you go further down, as the gray gets lower and lower, you're looking at your 2% and your 1% area. So they're right here side by side, so you can kind of see where the areas sit at. But it's kind of an eyeball. It's not really, it doesn't have to be an exact science. Yeah, you generally want to take the trade in the low value area, and then you want to take profit or at least trim in the high value area, because that's probably an area where it's going to chop. You have runners, that's why you use runners. You use runners so that if it keeps going to the top of the dome, then that's great. You make money there as well, but you want to try to at least take a trim in a high value area because that's probably where you're going to consolidate a little bit longer.
So so simple.
See that Mia Khalifa quote? Sorry for my voice, guys. I'm a little bit under the weather, but we're working through it. On TradingView, you can use the what's that? I forgot the name of that indicator,
Oh,
Fatty.
okay, guys.
Well, there's the OK guys indicator. Yeah, you guys can look that up in the server on the Discord, and that's the indicator that we all use for volume profile.
Is that what you're talking about? Or you're talking about something?
Yeah, well, I mean, I was gonna give them the public one, but yeah, they could use OK guys.
Oh,
I
the
don't even remember
who
the
is
name.
it? A Lux Algo. It's pretty
Luxalgo,
decent.
yeah, there you go.
Yeah,
Luxalgo has volume
Lux
profile.
Algo has VP.
It's just
Pretty
not
decent
as
as
not
well.
as not as good looking as this one.
Yeah, I like this one a little better just because you can highlight, like you can see on Crispy's, it highlights um, the high value areas and low value areas for you. So it's literally giving the areas to be mindful of price, right? And you can even color code them, right? So like for example, Crispy, I'm gonna send you a
Yeah,
quick
I'll
screenshot.
go into these.
I have my color coded to be red in the high value areas and green in the low. Obviously, can change those colors around to whatever they want, but
Yeah, you guys can, once you guys install the indicator, you go into settings, you can adjust how many candles it takes into account for the history of the indicator. So for example, I have mine set to 1,000. So it takes into account the last 1,000 candles when setting the high value area and the low value areas. You guys can change the colors. If you want the high value area indicator to be red, you can make it red, pink, blue, whatever you guys want.
yep. So that's exactly what I have. high value areas as red and low value areas as green. Green means go. Get in on it.
Knox, I don't trade anything except indexes, but I
But
mean,
yes, it does. I
yeah,
do.
it should work
So
on everything. It's literally taking
it,
whatever ticker you put, and it's just calculating the last X amount of candles and where their average price is. So yeah, it should work on everything. And like I said, use the tool as further conviction. You guys have gamma exposure, you have all the exposures that are there. Those are tools that are going to tell you whether we're breaking through an area or not. Those are tools that are going to tell you whether the market is in consolidation or whether it's going to be directional. So you guys have the tools to determine where things are going to go. Volume profile can be a tool that just gives you extra conviction and gives you entries and exits. And the most important part is learning about the dynamics and why volume profile works. You know, knowing that there's buyers, sellers, and imbalances between those two parties, and knowing how that affects the market and why the market moves the way that it does. That's the main lesson to take from this, because that's going to help you understand all of the exposures and the tools that are available much better.
and Matt, I am not Fatty Trades on YouTube. I changed my name in Discord to Fatte to try and avoid that confusion because that was happening a lot. It's this thing you're starting. It's kind of funny. You know, my name literally used to be exactly the same as his, was Fatty Trades on Discord for a while, and then I realized that he not only has that name, but he actually also talks about gamma and those things. But his data provider is different. So he uses Volland, I believe, which is a wildly overpriced version of exactly what we have. They have, I think, one of their subs is, to get 5 minute market updates, it's like $1,000 a month, whereas we get 15 seconds, and it's 1/10 of the price. So, uh, and they also, the way that they aggregate their data is going to be a little bit different than the way Traderlink does. So some of the stuff that he teaches, if you're looking at simply core concepts, the stuff that he teaches is pretty decent. But if you're looking at like how he uses and reacts to the data, it can definitely, kind of mess you up a little bit because it is not aggregated.
Couple of questions here. First Scott, because he has a easy one. Fatty, he wants to know if the VP on TOS is the same, because it just looks like the same, just flipped. Fatty can answer that better for you because he's on
Yeah,
TOS.
so I use monkey bars on TOS, and there's a couple things you have to change in the settings. I will post those settings in Discord after class is over, um, and I'll post screenshots as well, side by side comparisons. But if you use monkey bars, it does aggregate the exact same, and it looks literally identical. The bars are a little bit thicker, but the distributions are the exact same.
So one thing to keep in mind, in terms of volume profile, there's session volume profile. There's the volume profile that most people use is based on a set of candles. I don't even know what they call it. This is cumulative volume profile. So or if you want to be more specific, cumulative session volume profile. This volume profile takes into account the amount of candles that we set it to. It doesn't just correspond with the current session. So this is taking data that can go back, depending on the time frame, it can go back a month, it can go back 2 months. So that's a very important thing to point out for you guys, because on the trading view indicator and on the one that Fatty has set up on TOS, it's going to be that cumulative volume profile. But if you just go on trading view and you look up a regular volume profile indicator, it's probably just going to be either based on the session or based on a set amount of candles, and you're going to see like 5 or 6 graphs like this one. So that's something to keep in mind, that this is cumulative and this is taking into account multiple sessions of candles. It's not just taking into account one session. Another question someone had is they wanted to explain the bell curve again. Let me go to a different time frame and see if I can give you a better example of the bell curve. So, okay, let's go down here. So this is a pretty clear dome right here at the bottom. So essentially, if you look at it side by side with the bell curve, this area right here, the dark blue, this is the 70% area they call it. This is where the highest amount of transactions have taken place. This is where buyers and sellers most agree on the price. So where buyers and sellers most agree on price and on a fair value for something, that's where the most amount of exchanges are going to take place. So in this area is where you're going to see price consolidate, and that's why these bars on the right are going to be the highest, because that's where the candles have been concentrating for the longest amount of time. Once we leave that dome and start to get to the bottom, the top or the bottom area of the dome, those are the places where the price is least agreed upon, where there's some kind of imbalance between the buyers and the sellers. So if there's an imbalance between the buyers and the sellers, either they're going to go back to an area where they agree on the price. If we're going by that example that I used earlier, if a dealer prices a car too high, then they have to lower the price of that car so that they could find buyers for the car, or their inventory is just going to be sitting there. So it's the same thing with the market. They're going to go to where there's liquidity. Where there's the highest amount of liquidity is in that concentrated area, which is the dark blue area. So if price gravitates too far from that area, it's either going to find a new distribution, or it's going to regress to the mean, to the area where there's the highest concentration of liquidity and of exchanges taking place. So this is essentially a clear dome right here. Once we stray from that price, if you see here, right in this candle, we went down and we touched the bottom of that dome, and it immediately bounced back up and we started shooting back upwards. And now we're in a new distribution area over here. So that's how the dome correlates to the volume profile, essentially.
And to answer Ashley Madison, uh, I don't know if that's your real name, but it is. Your parents got some pretty good jokes. So when approaching an HVN, it's better to wait and react similar to gamma. Similar to a big gamma node, the HVN usually have lower volatility. I would say yes as far as the lower volatility goes, just because we're more likely to chop in an HVN. Maybe not lower volatility, but because I wouldn't necessarily use volume profile to determine volatility. I'd be looking at the IV on the chain or VIX. But in my mind, I'm not necessarily. I would be if price is at an HVN, I'm not getting entry. I'm waiting until it gets to an LVN, a lower value. That's. I mean, sometimes sure, if you see something different, or it's 3:30 in the afternoon, cons are super cheap. Sure, you can try and take a trade in an HVN. But for the most part, if I'm you know, uh, a trade, I'm looking to get in on a low volume, because that is where price has the most likelihood to react quickly at, right? So as you can see, as we hit that LBN, near that first green line that Crispy has on the screen right now, that is where price reacted, and then we popped right back out of it. So I guess to answer your question, I would definitely wait if price is just sitting at HVN, earlier.
Yeah, HVN areas, like I said, those are the areas where price consolidates the most. So most likely you're going to get some level of chop at an HVN, because it's probably going to consolidate there for a bit. Somebody asked, as far as on the upper distribution, there's two peaks. So this before today was likely two separate domes. We're chopping in this area here right now, so this is likely to fill out and make a larger dome. Yeah, I mean, it's possible for that to happen. It's also possible that tomorrow we could go to this upper distribution over here, and if we consolidate more, these peaks are going to be higher. It's not, again, it's not an exact science. It's a probability thing. So the probability is that we're bouncing from this low value node, and now we're back into a consolidation area. So if you had taken a trade over here where this green line is, which is a low value node, and you took that bounce back up, you would have trimmed your position at the high value node, and then you would have used the runners to continue up. Now, like I said, this was previously a low value node. So now that it's filling out, the chances are that since price is being agreed upon there, it has a better chance of moving up to the next area of the dome. This is probably going to be a large chop area. So look at how far back we've been chopping in this area. So this is just turning into a large chop zone. And until we break through either the top to hit new all-time highs or break this level over here, then we're going to probably chop in the zone for a bit. Some people are saying that we could, we could chop until March OPEX. So that could be this area right here. This is a large area, and this could just be a good consolidation area for now.
Bro, please don't put that evil on us. Don't let us chop till
I hope not. I
then.
hope not.
Yeah.
Mia Khalifa's wilding out.
Yo, Mia Khalifa is.
Right, let me see if I missed any questions. Do you all stream a commentary during market hours? No, we don't. You answered the HBN question. End of day, I thought we were going to squeeze up to 50.90. What stops the Vanna Magnet from pulling all the way up? I mean, the market, unfortunately, the market doesn't operate on the time that we want it to operate on. We ended up going to my target today was 50.93 on ES. We were a few dollars short of that, and then it hit that target in the after hours. That's just the way it works. Sometimes the stuff happens after hours. It's not just going to happen when you want it to, unfortunately. And it's not constrained. The dealers aren't constrained to operating during regular market hours.
And Johnny, to answer your question, I would prefer you can use it on SPY for sure. I prefer it on ES, however, just based on the nature of futures because they are traded, you know, almost 24 hours a day. So you're gonna have a lot more information based on the volume profile on ES versus what you're gonna have on SPY.
Yeah, for sure. On ES, you're going to get candles basically 23 hours a day. So, you're not going to have the same gaps that you have on other tickers, like SPX, etc. So we always prefer to use it on ES. Just more data. The more data that you can incorporate, the better. So ES is always going to give you the largest amount of data.
Scott, yes, I will. Are you in the Traderlink Discord or are you from Aces? Because if you're in Aces, I'm not. So I, I guess you can DM.
The volume indicator that I use,
Okay, yeah, I'll post that.
honestly, I don't even
Yeah.
remember. You gotta the one I use is it lets you see the separate bars for the buyers and the sellers. I forgot the name. I'll look it up and I'll send it to you guys. But there's a few indicators that do that on TradingView.
Actually, I think so,
Who else? Who else? Let's keep it going, guys.
yeah, ask us some questions. That's more or less. I mean, I feel like GP is pretty straightforward. What you
You want the volume indicator? It's on a separate list. Hold on, it's on a separate pane, and it's not letting me click it right now. It just says ball, so it's not gonna, it's not gonna give you the exact name. I gotta look it up and give it to you. Well, Tom, that depends because there's window of weaknesses for some of the exposure. So, like right now, Vanna is at its weakest essentially. So we're not essentially looking at Vanna constantly for entries right now. Um, so that's something that changes based on the time of the month and what's strongest at the time. But essentially I'm looking for volume profile. I have levels that are set up. I'm looking for gamma. We're trying to get at least 2 or 3 points of confluence that are strong. We're looking for larger moves essentially. So we want to have a couple of points of confluences that's gonna create a large move in the market. I mean, right now with the market, yeah, 10-point move is nice. But traditionally we want like a 20 to 30-point move, but it's just not happening, man. I mean, look at these candles. This is the 15-minute. It's just been even on the way up, it's just choppy.
And Scott, man, I just posted him in TL chat. Actually, I'll post him in Apex Traders so everyone can get to him. So you don't have to search.
That question, you got to go to Geo or Jarvis. I saw you ask that in the Discord earlier. That seems like honestly, I mean, based on my limited knowledge, it seems like a browser issue. Um, I would check what plugins you have on your browser and things like that. It might be something related to that that's causing an autoplay on the videos. On the OK Guys volume profile, I personally have it set up to 1,000, I believe, on the look back. I'll open my settings for you guys. Hold on. Oh, I didn't know it does that. Oh, actually, I have it at 700. I thought I had it at 1,000.
I've said on okay, guys.
So a lot of these settings you're gonna ignore. The look back is the only thing that matters. And then this is where you select your colors for the HVN and the LVN. Ron, that might be again, that's a browser issue. The layout is saved to the browser. So if you have like cookies being deleted, history being deleted automatically, or if you're like in a private browser mode, you're not gonna get the layout saved to your browser.
Loads. I pretty much look at it the same way I look at throughout the day. Speed, gamma, Vanna, charm. I would put uh, often I like to have split gamma right next to uh, net. Although if you're using delta adjust, then it's not really gonna be the same. Um, but I like to have just regular raw gamma and net and split right next to each other, and then also I have delta adjust right near that. I have Vanna, charm, and then speed. Speed I like to have on split for pretty much 3 weeks out of the month. And then during OPEX week, I put speed on net because you can you can glean a little bit extra from speed on nets during OPEX week. I have a video on speed for OPEX week in the Discord that is almost like a cheat code. It's been not quite as good, and since we've been in such a positive gamma regime, in my opinion, it works best in negative gamma. But if you watch how price reacts, you'll notice that towards the end of the day, if you look at split gamma or split speed, price tends to move towards the largest split exposure. So towards the end of the day, if you have a couple, or if you have, like today, for example, we had three. So I think we had 70, 75, 8. So when we tapped the bot, for example, when we tapped the bottom of the low end of split, at 70, you could enter a long right there, which is what I did. Targeting 80, I took the 80 calls. They went from like $45 to $150 in about 4 minutes. So it just, a lot, honestly, a lot of this is, in my opinion, for the exposures, is watching price action and watching the exposures, and then kind of taking that information for yourself. So we try and do what we can to share, what we've seen and how we use it. But again, building your own strategy around exposure is really real. I spent probably 3, 4, 5, maybe 6 months trying to tail Geo and Sheen on some of their plays back in the Telegram days, and some worked, some went. I was just getting absolutely cooked up. It wasn't until I sort of created my own strategy surrounding Vanna specifically in the beginning that's when I started to find success. So if you can utilize these exposures to your own benefit, to how your brain works, you build your own strategy. That's where you'll start to find success. You'll provide, and yeah, that's probably my best advice.
Yeah, I mean, speed
Yeah,
on OPEX week, that's like, I mean, even now, like we're spoiled, we're used to seeing, like on speed, we would take a contract at 50 cents and it would go to like $5, damn near guaranteed. But it's not as strong lately, but you should easily be able to catch, at least 100%. If you're not being greedy and you're trimming and you're staying disciplined, you should still be able to catch some good moves with speed, especially on OPEX week. Can you explain the difference between gamma, delta adjusted versus raw, and what's the benefit of looking at one over the other? So Gio was talking about this on the stream. I don't know if it was yesterday or today. That's recorded, and you can watch that video. He's gonna give you the best explanation for it, but he'll tell you himself. He looks mainly at the adjusted. The delta adjusted takes into account different calculations than the raw. The raw is just basically a naive gamma. It's just the straight gamma data from the data provider. Um, he's putting certain calculations into the adjusted, which are modified for the current market. So it's taking into account more information and it's more accurate. Those are his words exactly. So like I said, you can look up his video that he posted today from the stream and he'll explain it in detail there. But essentially, according to him, you should be using delta adjusted because it's going to be a lot more accurate. Yeah, it's all. I'm pretty sure he posted it, so it's all recorded. But yeah, that's the gist of it. He prefers to use the adjusted. I keep personally, I keep both of them open. If I see, a huge divergence, it's like if I see a AOI on the raw gamma at 5080, and then the D adjusted has an AOI at, 5100, I'm probably gonna assume that it's gonna chop between that zone. So, unless I hit one extreme or the other, I probably won't take a trade. So, some people keep both of them open and look at both of them for confluence, but according to Geo, the adjusted is definitely the one that you want to prioritize.
Yeah, DHS is just going to have more information, so it's taking into account more than just gambling, basically. So it's taking into account several other exposures kind of all tied into one. So you get more information out of DHS than you get out of just the raw gamma. However, since we've been we used to be looking at these charts that were posted once every minute in a Telegram feed through a bot. So, there's a couple of us that learned how to trade this style off of just raw gamma. So, it's once you learn something one way, it's hard to completely shy away from it. So I like to use both as well.
Oh, so that's what I was gonna say earlier also. So guys, this class is, a little bit more casual. We're just fielding questions. We gave you guys the rundown on the market auction theory. We're gonna try to in the future, we're gonna make this better. We're gonna have a little bit more visual aids. Lick is a little bit sick today, but he's going to be joining us too. And, he's got a ton of info that he can share with you guys. And we're going to try to structure the classes a little bit better, get on a steady schedule. And like I said, we want to make sure to give you guys from the basics to the advanced and really show you some of the mechanics in the market, because that's going to help you be more effective with the exposure. So, if we can get together a syllabus and get a steady schedule going, we'll definitely do that and share that with you guys. But today's class is a little bit more casual and kind of fielding questions and giving you guys a preview of what it'll be like.
Yo, Noakes, we're recording, so I'll chill. But yeah, so the goal, right, is to start simple, start easy, and work our way to the more complex stuff. So like we have plans for like MoMA, Zoma, obviously Gamma, Beta, Speed, uh, Lambda. We definitely got plans for the more complex information, but we wanted to start simple.
Is the AOI the largest exposure at the time? Yes, the AOI is the largest exposure at the time. But sometimes, like the market's going to be moving. Sometimes I keep an eye on, if we move away from an AOI and it doesn't, there might be another AOI that takes over. But if that original AOI is still present, you want to always keep an eye on it, because, when you're diverging from a large exposure, that's where we look at split divergence, and where we try to look at where the market might regress to. So if we start making an aggressive move in one direction away from an AOI, and that AOI doesn't completely disappear, we always keep an eye on it, because we might get a reversal back to that AOI at some point in the day. So I mean, take it as definition. It's an area of interest. If it was an area of interest at one point, it's gonna, you should always keep it in mind. I mean, that's another topic that Gio addressed in the stream. The way he treats trading on a larger time frame, he treats the exposures pretty much the same way. So yeah, that is something that can technically happen over a multiple day period. I don't necessarily trade long term, so I can't speak to that too much, but based on theory, yes, the same thing can apply. Yeah, I mean 50, 60, that was also a low value node. So, that's the beginning of a very long low value area. So, you have all of this which doesn't have much volume on the node. So that's a good place to go for a bounce for sure. I had that marked as a level in the morning. Yeah, we do use fib retracement. I always have fibs up.
Someone in the Discord is asking how we use the average line assessing gamma strikes from move two. So we used to back in the Telegram days, even some of the early Discord days, we had kind of a theory surrounding how price reacted uh, based on how basically based on the structure and shape of the IV line. Uh, I think we've kind of strayed away from that a little bit. But basically, if it's a very, very flat smile, right? More like a smirk, you can kind of expect a less than exciting day. If it's a very steep smile, side of the curve is very, very steep, you can probably expect a little bit more excitement. To answer your question, Blue Jay.
Anyone got some good fib settings? I don't think we what do we do, Fatty? The 618, the 686, and the 7?
Hold on.
I'll do a fib for you guys. Hold on.
So yeah, I have
All right,
I
so
know
we do the 618, the 707, and the 786. Basically, if we go from swing high to swing low, from swing low to swing high. So in this scenario, we're going from swing low to swing high. If the market were to retrace and come down to the 618 area, then I would hypothetically enter a call there. You can see that this is also a high value node. So now I got 2 points of confluence. So if we come down to that 618, I would very likely take a call there because we're retracing back to the fib entry area. We would average down at the 707, and then the 786 is essentially where we would cut the position. That's like our stop loss area. But this lining up with that little HVN right there, that's a good area for that where we would probably take a call. That's how we use fibs. We go from swing high to swing low, or from swing low to swing high. We try to catch the retracement of the move if it lines up with other indicators. Patty, I think, has a little bit different settings on the fibs, so I know he uses them in
yeah,
both directions.
I like the reverse moves too. So it's just all again, it's all about doing your own research and finding your own kind of thought process, right? So like I was, you know, as Crispy just said, he'd be waiting for a long, right, to go at the around that 618. For a while, I was doing the same thing, and then I said, hold up, if I'm just sitting here waiting for a long, not in a position, and I expect price to retrace to that 618, well, why don't I figure out some levels that I can pop in there as well, so I can short it until that 618 and then reverse. Uh,
Mhm.
so it's just, again, it's all about finding style strategies.
Yeah, we do. So we approach it the same way as volume profile. We'll look at the fibs on the hourly, on the 4 hour, and then we'll bring it down to the smaller time frames and see if they line up. If they line up, that's just more confidence. And like Fatty was saying, you can definitely, I mean, in this scenario, if you're expecting a move down to the 618, why not ride that down and play the puts? So you can use it both ways for sure. You're talking about this one right here, Drew? I mean, this is at this point, this is kind of far, if I'm correct. But yeah, I mean, there's if we were to come down and start breaking this low value area, there's a chance that we could come back down here. This is a consolidation area, so yeah, this could be a good support area. The price, once it's in that high value area, you're gonna tend to fluctuate between the top of the dome and the bottom of the dome. So you can, in consolidation periods, you can play the top of the dome to the bottom of the dome. Like I said, usually when we're consolidating, more often than not, we're gonna reject or bounce at the low value areas. So you can always enter a trade in the direction you're expecting and play it back to the high value node. So that's a high value nodes can be a good area of support and resistance for sure. We take a lot of factors into account with choosing the contract. I like to choose contracts that I are in the money if it hits my price target. I know Fatty likes to do the same, but Fatty also uses Lambda to pick targets. There's a couple of ways that we pick our targets.
Yeah, so far with those, I like to, as Crispy said, so like, let's say I think price is gonna, like today, let's say I think price is gonna, 50, 80, right? I would try to take the 75s. My goal would be to get them around $1 and then set a sell at $5. Because the second price hits 50, 80, those 50, 75s are gonna have intrinsic value of $5. And so, that 1 to 5 is where I like to live. So, if I want to get an early entry because I'm worried they won't get to that one, I'll get in at 1.5. If I think, if it starts going against me, maybe I'll average that 0.5. It just kind of depends. But my goal is usually around, at minimum, 1.5 to 5 on the contract.
Jade, your fibs question, Patty, that might be better for you to answer. I don't know. I'm not sure what she means.
Do you ever do two fibs? Sometimes I do a fib on my swing low. So the previous day session, 4 hour session. Oh yeah. At least I think I understand this. So like what you can do is, you can start all the way up to the daily, do a fib on that, or probably more likely the 4 hour, the way price has been moving. Um, do a fib on that and then sort of drill down, mark the levels where you think those, like where that 618 or 707, what you are looking for, depending on your style, depending on your strategy. Mark a level on there, get rid of that fib, and then do it on the 1 hour. Mark your level, get rid of that fib, then do it on the 30. Mark that level, get rid of that fib, do it on the 15, so on and so forth. And then you can have multiple points of confidence.
All right,
That's
guys.
kind of like the beauty. the terrifying of trading, right? There's 1,000 plus ways to skin the cat, right? So it's all about what fits your style.
Infinite average downs.
Yeah, that works too. I mean, shit. That last Tuesday, I was down so fast, and just kept shooting. Uh, and then yeah, also on infinite average, I would highly recommend sliding down the contract, right? So like, let's say your first entry is on a contract that costs $1. Now all of a sudden you have a contract that's $15 closer to the money. Those cost $1. Well, what am I going to do? Am I going to average down the cons I already bought that cost now they cost 0.2, or should I buy some contracts that are that much closer to the money that cost $1, which is where I like to be? I'm probably going to pick those contracts that are closer.
All right, peeps, we're gonna start winding down. So, any last questions? Nah, you can save them for the next session. Blue Jay, that your question, I see it. We're probably gonna address that in the Gamma class. That's a little bit more elaborate answers. It's gonna be better off in that class when we're focusing on that. And in terms of dealers offloading bucks, to be quite honest, do not have an answer for that. I'll
Yeah.
bring that up with
If I
Gio.
knew that answer, I don't think I'd be here. Be fucking barbecue.
Thanks, Michael. This is our first class, so thank you for bearing with us. Like I said, we're gonna work out the kinks. Fatty's in the middle of moving, so he doesn't have the best internet right now. I'm sick, so I barely have a voice. So bear with us, and we'll improve. We're gonna get things going smoothly.
As far as zones asking what are we teaching in next class, that is a great question. What are we teaching in next class?
We're
Your
working
position.
out the timelines. I mean, we had a lot more stuff that was on the docket for today even. So we gotta see. I mean, we're gonna have to assign like time limits to some of the topics and iron that out. I think the next class is going into um going more in depth into dealer positioning,
Yeah.
which was supposed to be part of this class. But like I said, we'll take a look at it and look at the recording for this class and see, how much time we're spending on topics and try to adjust things so we could give you guys a kind of an accurate schedule or maybe a syllabus of what it's gonna be.
And honestly too, if you have that thing that you're curious on or you want to learn, post it in the Discord and tag myself, Crispy and Liquid, and say, hey, it'd be awesome if you guys can cover X, Y, and Z in this class. Yeah, no, no, you can definitely start it behind 100%, 100% support that. I'm trying to get this Elon shit up in here since I got a new spot, and I'm cheap as fuck.
All right, guys. I think we'll end the recording at least so that we can keep this as close to an hour as possible. And I mean, Sheen, whenever you wanna end the meeting, you can hop in. If anybody doesn't have any more questions and stuff.
All right, yeah, I'll end it here. Once again, if you guys have any questions, feel free to tag Jason and Fatty in the Traderlink Discord. If you have questions, I did send this out to Ace's Discord. Feel free to tag me, and I will try to respond. There's a lot of noties from Discord, so I usually don't ever check Discord if I'm being quite honest. But still, I will. If I see it, then I'll respond. But with that being said, I'm going to stop the recording. Thank you guys for tuning in,